Defiant as she goes, it does not want to crack under 5,000, does this market? At 5,018 now, Sensex is down just about 0.8%. I think that probably makes us the best performing market in the world today. That's not a bad place to be at all as far as our markets are concerned. Let's focus on the IPO of the day as well. Mandhana Industries, it had a fairly respectable listing for itself. In fact, it's not done too much below its issue price like its predecessor yesterday, Tarapur Transformers, which had a bit of a rough ride for itself. Currently trading at about 134. It's hit its QIB break-even of about 137, if I'm not mistaken, in the early part of trade. Let's get some more perspective. Manish Mandhana, the Joint Managing Director, joins in on this leg of the show. Manish, morning. Thanks for joining in. Congrats on a good listing on an otherwise very weak market day. Can you start off by telling us what kind of projections you're working with in terms of sales and profits for FY11 and 12?
Good morning, Rahul. FY11, we are looking at 750 crores of top line with a bottom line of about 65 crores. So we're looking at an EPS of 20. And FY12, we are looking at anywhere close to 1,000 crores of top line and about 90 crores of bottom line.
Mr. Mandhana, good morning. What about profitability? How are you looking at margins shaping up, going by how your input costs are shaping, and just how much pricing traction you might be getting in your export markets?
Surabhi, to be honest with you, the kind of product we are into, we are not into the commodity end of the market. We are catering more to the mid and high end of the market. We have customers like Armani, Tommy Hilfiger, French Connection. These are all the international customers that we have. Margins typically in our apparel business is the EBITDA that we have is close to 28%. And the textile business that we do is about 19%. So we are looking at EBITDA of about 23%, 21 to 23%, closer to that. And even in the last 5 years, we've typically shown a tremendous growth in terms of year-on-year basis. We've done about 37% of growth in the last 5 years, and we wish to continue the same in future.
Since you brought it up, some of these very high-profile clients that you've got within your fold, what will the sort of outlook be from here on? What will the business look like? Will you start focusing more and more on some of these high-end international clients, or will you also continue to look at the domestic market? What can we expect as in the nature of the revenue book, let's say a year down the line?
Absolutely. Exports typically is about 30% of our total turnover. Our key focus is still into the domestic market, which is almost 70% of our top line. And we cannot ignore the fact that India is one of the largest consumer market. It's a very stable economy. So we have a very strong foothold in India as well. And even in exports, the kind of business we've chosen to do is more towards the mid to high end. And in terms of growth, we keep on adding customers season after season. Our capacities are almost fully utilized, and we are increasing it typically in the last 5 years every year. And the books have been healthy for us in terms of our company. And revenues, I've already given figures to Rahul earlier what we are looking at.
Can you give us a sense of where you see exports as a percentage of revenues overall, Manish? Say maybe in a year or two down the line, once your capacities come on stream, the new garment manufacturing facility that you're setting up at Tarapur and the yarn dyeing and weaving facility as well. Once both of these come in and you have the excess capacities to work with, how much will exports contribute, and how would you then perhaps deal with this huge currency fluctuation that's happening with the US dollar and the euro vis-a-vis our own currency? Is that a bit of a concern as far as profitability and holding on to margins is concerned?
We follow a very simple strategy in terms of our costing and pricing. We always, hedge ourselves with a simple forward contracts covering almost for 50 to 60% of our business at any given time, whereby we know that we are not going to take a hit. Apart from that, as I mentioned earlier, the kind of category of products we are doing, pricing is never an issue. We are not into the commodity end of the market. We are dealing with customers who are looking at value-added products. We are making products which are highly embellished, and they have their own niche and own market. So our focus has always been there as a company right from the beginning, whether it's our textile business, whether it's our clothing business. So we've been through a lot of turbulent times. I mean, the global economy in the last 4-5 years, you've seen all kinds of highs and lows, but even in the bad times, compared to our peers, we continued to grow, not at the rate which we wanted to, but we still showed a healthy growth of 17% last year, besides all the global meltdowns and everything that was going on. So we wish to continue to the same strategy going forward. Our business is also commoditized, looking at the capacities that are coming in future. We are also working with large groups who have large buying, and even with those groups, we are present in their higher end of the price bands of the products that they sell in their stores.
Okay, final question then. I believe after the issue and the expanded equity base, you will still have a debt-to-equity ratio of about 1.7 times. Can you verify that figure for us? And what's the plan just from the financial sense? Are you looking at repaying some of this debt? I believe it would be, some of this would be TUF loans, the textile upgradation funds, which typically attract lower rates of interest.
Yes, the entire term loan that we enjoy is under TUF, so you have a straightaway 5% interest subsidy on that. Apart from that, I'm sorry, I lost your question that you asked.
The debt-to-equity ratio, Manish.
Sorry?
Debt-to-equity.
Yeah. At this point, post-issue, our debt-to-equity ratio is 1:1, which is fantastic as per the industry standards, which is anywhere from 1 to 1:3 or 1:4. In fact, we are one of the lowest leverage companies in the industry in textile.
Good speaking with you, Manish. Congratulations once again on a fairly strong listing. Like we said, on a fairly weak market, your stock's holding out. Good luck with your plans going forward. Not a bad place to be in a market that's down 1%. The stock's holding up 2.5%.